morning, everybody. Welcome back to the Everyday Growth Advisors live stream. I hope you guys are having a good day. Happy Monday to everybody out there. Welcome back. It is a new week. We had a webinar earlier today. If you haven't had a chance, go have a look at it. It is now live on YouTube. I uploaded it a couple hours back. It's called Inflation Outlook for 2021 Explained. If you have a couple of minutes, go have a look. It's a 20-minute video roughly explaining what I am expecting for the coming few months in terms of inflation for the US economy and forward. Of course, many people are talking about this as a main topic of discussion as per this past 2 weeks. So I decided to do a little bit of a video to cover it and to have you guys know a little bit more about it. Today, if you watch this webinar, you will also see that we are expecting a sector rotation into cyclicals. So we have been looking at energy, financials, and industrials leading the way with the Dow Jones Industrial Average. But we are now looking at a possible pivot into the cyclicals of the market. Now the Dow Jones looks heavily overextended, but we shall see if this rally can continue on. In my opinion, it's about to be a flat trading week all the way up till Wednesday, which is when the Fed makes its interest rate decision, which we're not going to likely see any change or drastic moves. I think that the market will trade fairly flat until then, with volatility slightly decreased until that's usually the trend and how it goes. As you can see, volume has been falling the past couple of days. And the Nasdaq still having a tough time kind of breaking out of these moving averages here. And we want to really see a push up against these moving averages, a consolidation above them in the longer term 4-hour daily chart. On the daily chart, we bounced off the 150 and we are slated to make a move higher. But let's see if we can get the rotation out of the Dow Jones into the Nasdaq. That would be exactly what we're looking for. The S&P 500 in the meantime, looking to break out of all-time highs, but just still hasn't been able to really find that momentum to push it all the way. We might get that by the end of this week, however, once the Fed makes its interest rate decision. So that's what I'm going to be looking at, the standard backdrop of the market. Chinese stocks also getting hit a little bit early on this morning with the news about Tencent getting hit with a $62 billion wipeout, thanks to the Chinese government that has kind of clamped down on fintech once again. This is the second company that's getting clamped down. The first one was Baba through Ant Financial, and now it's Tencent. So they're trying to regulate that small financial technology market, which Tencent has been actually pretty famous for. So okay, in other news and announcements, remember this is the last week that you can sign up for the Everyday Growth Advisors mentorship course. For the technical analysis course, this is the website. I'm gonna go ahead and post it in the chat just in case you guys want to have a link towards it. This is the link to the course sign up if you want to sign up. It starts next Monday, and I'm really looking forward to it. There's a lot of interesting things that I'm working on, and designing this curriculum has been definitely one of my most comprehensive curriculums ever. Just to go through the curriculum a little bit with you guys. We're going to be going through major market structures, mainly the types of orders that come in through. What is the structure like when you place a trade? How are those things executed? And then buyer and seller profiles. What are bulls and bears actually like? What are the animal spirits that drive the market? And those very, very in line with supply and demand. The psychology of day trading. The pitfalls or the strengths that you need. I'll be going through those things, the common mistakes and stuff. Top-down analysis, understanding different time frames, what you should know about them, or my preferences generally, and then risk and reward management for a small versus a large account. I'm going to be going through those as well. On Tuesday, the second day, we'll be going through trends, channels, wave patterns, mainly up, down, sideways channels. How do you spot them, the technical patterns, and then level 2 data, trend validation. How do you validate these patterns? Reading the tape. How do you actually read level 2 data tape when you're performing a scalp trade or when you're looking at market backdrop and the market breadth? And then reversal pattern strategies. How do you see the difference between a breakout versus a reversal? So those are two interconnected things. Sector rotations and market fundamentals, what you should be looking out for. Those are another thing that we'll be going through on Tuesday. The Wednesday we'll be going through Fibonacci's, extensions and retracements, trading breakout patterns, wedges, pennants, channels, what you should look for, how do you spot them, and then my 7 top indicators: moving averages, RSI, the VWAP indicator, OBV, volume profile, ATR, and stochastics, as well as strategies on playing gaps. So that will be on the 3rd day. The 4th day will be all of the different types of trades with technicals. How do you use technicals to confirm these? Stop losses, how do you set them? How, mental discipline, what are the rules that you follow with the stop loss, etc. And then finally using data to kind of find improved success trades. What are the things you should be looking for when you look at options data flow? So this course is actually an advanced course, and I don't recommend it if you haven't taken a beginner's course. But if you know a little bit about options, naked options, this is definitely the course for you if you're looking for a fundamental development in your technical analysis. And then the last day, we're going to be doing managing losses and expectations, building a pre-market checklist, what you should look out for, building a watch list and a scanner. How do you do that? Using FinViz, market breadth, what you should be looking out for, interest rates and markets, how are those correlated, and introduction to the EGA community, which is a Discord. Of course, we'll be having 2 live trading sessions as usual, and a bunch of free stuff that will be given to you guys during the course as well to help you out through it. Live Q&As, and then also my indicator setups and lifetime access to those recordings. So a pretty comprehensive course. I think this is the best package that I have absolutely put together for a course, and I hope that you guys will join us. We already have quite a few signups, and the seats are filling fast, so I hope that you guys will be there with us. Cool. Last week we went through a JD's chart right before we closed off the week, as we were going to choose this for this week. And here we actually plotted our target down to the demand zone below us at the 72 to 77 level, and we're actually coming pretty close to it right now. So JD in the short run is going to be actually a bearish trade here, but in the long run I see the stock being a winner in my opinion. In other news, we have futures that are easing. Geely Auto to outlay almost $5 billion on a battery plant. And then let's see, vaccines, China to raise retirement age. Okay. Not much on Bloomberg apart from that. US banks will turn last year's fear into this year's profits. Yep. This is why financials are on a red hot rally. It's been definitely a very interesting rally on financials, and I think it might continue. Financials are also considered cyclicals, don't forget that. So in terms of reopening stocks, financials definitely stand to benefit from everything. Remember that when increased spending leads to increased borrowing, and increased borrowing means increased revenues for banks, top and bottom line. And even if interest rates do increase, then banks tend to benefit from those. So the market's pricing in a very strong financial recovery, pretty much a reverse from what we saw last year when financials and energy were getting murdered. And now, of course, we're looking at specifically cyclical stocks that are also doubling up as COVID opening stocks. So your LVS, your MGM, these are very, very, expected to rally. And yeah, everything else pretty much trading flat here pre-market. As I mentioned, should be pretty low volume these next few trading days. China's economic activity soars. This is a precursor to how the US economy will soar. I think that we will have a very strong rally in the US economy as well. And so I think that people will be looking at this as a little bit of a forecast of how the world will recover back from this pandemic. And let's see, Sterling implement relief plan. Electric vehicle startups promise record-setting revenue growth. Okay. Gilead, Merck. Joint forces develop long-acting HIV treatment. Colleges. Okay, cool. Nothing much there. Okay. Pre-market movers. Boeing up about 1.3%. I closed out Boeing shorts last week for a massive loss. I was gonna short Boeing, and then I shorted Dow Jones, and that wasn't a really good one. I didn't expect it to continue running for 2 days straight, but I think it's gonna continue running, so I decided to close it out. Didn't want to take an L on it, a worse L on it. Got back some of my money instead. Let's see. Today we have the 3-month auction, 6-month option, and then U.S. foreign buying of T-bonds. Overall not capital flow, okay. And okay, not much else. This week we do have pretty high impact news though. Daily Treasury yield, the 10-year is now back at 1.64, higher than where it was last week. Is it cause to concern? I don't think so yet. Remember, we are kind of moving back to last year's levels. And after last year's bond surge, the bond buying surge during the COVID crisis, this is just us going back into normalization. This is what I feel. We have been watching this pretty closely. I was expecting that the increase in the yield would cause a jitter in the market, but now that the jitter is over, I am of the reason to believe that the bond market's not really going to heavily affect what the S&P 500 and the Dow Jones do in the medium term. So even though we may see continuation of bonds propping higher, that has already been somewhat priced in, and so we don't need to really give it that much of a importance right now. That's my view. Watch the webinar and you'll further understand why it's important. And then on other news, director of Microsoft bought 4,300 shares, increasing her position by almost 600%. She purchased, whoever this person is, Walmsley Emma, purchased $1 million worth of Microsoft shares. And you know, I've spoken about this before. When insiders, they sell shares, it could be anything, right? It could be anything. They want to buy a car, they want to buy a house, Remember, Mark Zuckerberg's been doing that for a while. But when an insider buys shares, that's usually only one thing. And usually only means that they are expecting their share price to go higher. So this person bought a bunch of Microsoft shares, and so they have almost $1 million worth of it now. And that's pretty interesting. Maybe they are intending to hold those shares for a while, but nobody would buy their shares without, having some kind of an inkling that they may go up in the future. So maybe she does really good TA. Who knows? Apart from that, not really much else, I want to say. Yeah, not really much else. Let's see. I didn't see any other important. Well, there was Moderna, this guy who sold majority of his stakeholdership, and Marriott also sold a considerable size, and then this guy Moderna once again sold. Henderson's been letting go a lot of his Moderna shares, so that might be something you might want to watch. I don't know, but it wasn't really a big amount though, like 879,000 here, and then another 800,000 here, so about 2 million. Not too bad. Either or, just keep an eye on Moderna, I guess. Apart from that, not really much notable ones. The lesser percentage ones are pretty, nominal. Zuckerberg continues to unload his shares. I'm pretty convinced that he has like a set schedule to unload shares at this point. And yeah. Okay, cool. What's up, guys? Good morning. How are y'all doing? What's up? Mark, Seabass, Aaron, Susie, Mario, Jacob, Kevin, Raymond. What up? What up? Let's see. Morning. Can you explain gamma acceleration? The reason why you pick certain strikes. That's quite a long explanation, actually. I'm not sure exactly what you want me to explain from that situation, though. You pick certain strikes and hope for gamma to accelerate, as when a stock reaches at the money, gamma is at peak acceleration. That's the best way for me to explain it in a nutshell. AAL up 4%. Except for a TA class. Francesco, did you sign up for it yet? I don't think I saw you in there. But I hope that you'll be signing up for it soon. Yeah, there's absolutely, travel stocks are the ones that are moving pre-market. You can see United Airlines and also American Airlines are up here. NASDAQ, okay. NXP, whatever this is. Check cap. Da 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 da. Okay, cool. Got it. Okay. Well, pre-market movers here all over the place. Boeing's kind of up, and then airlines mostly. You can see that right there. Mosaic Company, Travel, Dish Networks, AMD's up slightly. We continue to have a cyclical shortage in semiconductors, which, remember guys, I said a couple of months ago we were at the starting stage of the semiconductor market, and how I was mentioning that soon we'll have a situation where demand will outstrip supply. And so now we're having that issue where we have a chip shortage. And this is usually the time after a few months where, this is a bad time for semiconductors, right? It's a bad time. And then what will happen is we'll have an oversupply, and they will start flooding the market when they catch up to demand. And that's, honestly, this is actually a great time to start purchasing, positions in semiconductors, namely your AMD and your NVIDIA, stocks like that have been beaten down. This is a $600 stock. It's starting to recover a little bit. With NVIDIA, we see a first level retracement back at like 530s and eventually back at the 558s too, at these two levels here. We should be looking at picking up positions on these semiconductors as they are getting beat down like that. And especially since the Nasdaq's down, these are the ones that are going to rally pretty strongly once supply catches up. And, you have QCOM as well, which is having a major supply issue. But that's a good thing, because remember, if demand's outstripping supply, when supply catches up, then it's going to be a great situation for these businesses. It had a big gap that it came down to close, and so QCOM looks like a great little position to take a starter position in right here, to play this to the upside in the future. And Micron as well looks like the same, nice little sitting on the bottom of the channel. Nice little stock to play up to the upside as well. If you're planning to take a swing trade, this one looks pretty good as well. No complaints there. Okay, excellent. Let me take a little bit of time to do JD. So JD, as we know it, a Chinese company. Remember, these live streams are going to be shorter nowadays because of how I want to devote more time to the Discord. And so I'm going to try and finish everything as quickly as possible so that we can get more time to do other things. So let's have a look at JD real quick. First things first, the fourth quarter highlights. So let's have a look at this. It's actually a really nicely done slide deck. So I want to go through a couple things here. So for those of you that don't know what JD does, they do e-commerce. Okay, they're pretty much similar to Amazon and Baba. Okay, and they're looking at their fragmented retail market and rapid shift to the e-commerce in China. It's been an insane growth. So you can see that they actually have a 7.8% CAGR right now, which is pretty good comparatively for 8 years. And their market concentration, you can see that they have very few incumbents, and lots of continued online penetration from retail. So it's growing and growing and growing almost exponentially, which is significant data that we need to look at when we're considering online businesses like this. And the online retail market size is now grown massively as well. So there's a little bit of statistics that they're putting here for you. Here's how the larger growth competitors are versus the US market. So JD falls under here, and this is the JD's net revenue. Suning is the second one. Sun Art, Vips. Then you have Alibaba Retail Initiatives, GOMS, whatever else that they have here. I never heard of these other brands. In comparison, here is Walmart's number one retail sales. Then comes Amazon, which takes the internet retail e-commerce space, right? And then comes Costco in terms of revenue. Then Walgreens, Kroger, Home Depot, CVS, Target, Lowe's, and Best Buy. So JD actually, has a pretty high revenue in terms of its competitors. That's what it's trying to show. In terms of momentum and financials, this company is doing pretty good in terms of growth. We'll go through these on Wednesday, the financials. And let's see. The nationwide network. This was the thing that I wanted to look at. They have a pretty good, deep network of logistics, which is actually nice. So fulfillment-wise, this is actually turning out to be a great little thing. They're competitively more like Amazon because they have fulfillment centers. Baba is more like connecting marketplace participants through supply and demand, but this is more like Amazon. They do more like Amazon style e-commerce. So, you know, they may even have inventory, whereas Baba doesn't. That's why Baba is, in my opinion, you know, a more lethal business because they just connect wholesalers with the retailers or wholesalers directly with the customers. But JD does basically business to consumer, so B2C, and also I believe B2B. So they have 7 cities fulfillment, 900 warehouses, and then 21 million square meters, 190,000 delivery people, and they have these smart warehouses similar to Amazon. Okay, so this company is more comparative to Amazon than anything, and so this is a good thing to know. They're covering, you know, majority of different places here, and they are going to be ramping out these as well. And let's see here. What was I gonna say? Changing this. I wanted to look at the timetable. Okay. So FYI, this business had a pretty good quarter just this past week. If we look at Morningstar, we can also look at some of their key highlights on here. Let me pull it up for you guys so you can have a look at it. And you can see here, you know, for a equity business that is running like on the scale of Amazon, they actually have a pretty solid financial backing. So ROA is about 9.6, return equity is about 25%, ROIC at 20%, and net margins at 4%. That's pretty solid for profitability. Revenues are growing at a 30% annualized rate, and debt over equity is very low, which is good, and the interest coverage remains high. So they actually have enough cash to you know, make it through any storm. Now, of course, looking at the quick ratio here and the current ratio here, you must be wondering, oh, wait a minute, something's off, right? Because T always says that, oh, this number should be more than 1. But I think by now you guys should know why the quick ratio less than 1 here makes sense. And this being less than 1 is completely normal. It's because quick ratio takes into account inventory. And so, you know, this business being a high inventory business will have a lower quick ratio than usual. So therefore, the current ratio and quick ratio here are acceptable. And this makes a pretty decent case for a company that's growing. You can see that they went from negative free cash flow to positive free cash flow these past 3 years, and it's been actually pretty awesome. So that's something to also note. They also have a pretty solid amount of debt, and in terms of equity, it's a very acceptable amount. And the amount of cash and cash equivalents have been growing very steadily, and so have assets. So this is really a good thing. In terms of operating cash flow, it also has been growing very significantly, which is really great in my opinion. So these are the key things that we should be watching out for. They're investing a lot of their cash as well, and so that's good. Net income has been growing. They were turning a loss, and now they're turning a profit, which is once again awesome, right? From a negative EPS to positive now, and revenues have been growing consistently. This is a business that's showing good track record, momentum, and growth, and so I think that when we do the valuation for this business, this is more than likely to be an undervalued business in my opinion. Just looking at the financials here, looking at the growth, looking at the amount of cash, everything, it seems to me like this business will end up being undervalued. But we'll see on Wednesday if I'm right or if I'm wrong. So far so good. Looking like a great company to own, and I like the company itself, what it does, and stuff like that, which is great. So they want to become the supply chain, technology, and service provider. Cutting edge retail infrastructure seeks to enable customers to buy whatever they want, whenever they want, and yeah, okay. So they're the same thing as Amazon, okay? Using AI and using great smart warehousing space, etc., to deliver stuff. And so that's what you need to know about JD. Okay, can you Apex clearing merger with NSTB in a month or so? Excited. Okay. UOT except for T class within today. Okay. How do you put the indicator for support zone and 3 targets on TradingView? How do I put the indicator for support zone? You mean the green box? And 3 targets. 3 targets. You mean these targets? Can you be a bit more clear so that I can help you? Also, the rest of you guys, thank you, 54 of you, for turning up. I really appreciate it. We can take a second out of your day to hit the like button. If you can't, that's fine too. I know. You guys are super busy, and I really do appreciate it. You guys taking the time out for being here. But yeah, if you could take a second out of your day, lightly tap the like button, give us a like, subscribe if you haven't. That would truly mean a lot to me, and I appreciate it. The box is drawn by this tool right here. You can go under this thing over here and type and use the rectangle. Draw a rectangle and change the color and change the opacity. That's how you draw a box. As for the target, you come right here and go on the shapes and targets right there, and you can change the size and whatever you want on it. That's all. I have all of those things usually on my toolbar right here. You can favorite them. All right, awesome. Well, perfect. I didn't want to hold this live stream for too long, so these are gonna be 30-minute short live streams where we can really just bang it out and get it done. So as far as everything else, remember what I said. So this week's gonna be once again, I'm gonna repeat. And if you haven't watched the webinar, go watch the webinar. So I'll keep this live stream short so that you can go watch the webinar instead, because the webinar is important. And in the webinar, I cover what the inflation means, how it's going to affect, etc., and likelihood of that being, any specific thing for markets. And then take the time to watch that instead. Going to be a pretty slow week until Wednesday or Thursday, until the Feds decide, which, by the way, they're not going to increase interest rates, but the market's going to be jittery about it. That's for sure. There will be jitters. I'm sure that there'll be a couple of rug pulls. There'll be a couple of false sell-offs. There'll be a couple of this, couple of that. So you don't really want to get caught up in all of that. Just be patient. Don't overtrade, and you'll be fine. And yeah, I'd say thank you for attending the stream, and I'll see you guys on Wednesday. Keep it short and sweet here. Keep it short and sweet. Keep it like that. So I'll see y'all when I see y'all on Wednesday. I'll be doing the fundamental analysis, and yeah, it'll be valuation of JD. Come back on Wednesday, and let's find out how much this company is actually worth. And I'll go through it on Wednesday. I'm having trouble finding 3 targets showing me what we want to reach to help. Huh? I am completely finding the 3 targets. Are you talking about the head and shoulders? The targets are just a shape. It's just literally right here. If you're talking about head and shoulders, it's here. Right here. Head and shoulders. Yeah. Anything else you need help with, Carter? Really like the webinar. Well, thanks, John. Appreciate it. To the right. What? These? Do you mean the Fibonacci retracement? Are you talking about the white one? Could you be a bit more specific, man? Like, you know, tell me exactly what you're asking me about, because I honestly, I do not know what you're asking me. Like, say colors, or say shapes, or, you know, something like that, because, you know, I'm not really sure what you mean. Well, this is what we call a Fibonacci tool. This can be found right here. Fibonacci retracement. This is the tool. You can draw it. Yours is not going to be the same as mine, though, because I have modified mine. I modified mine to suit my own specific style. So my Fibonacci levels are different. Have the market priced in all the yield and bond prices fluctuating? In my opinion, yes, Nick. Watch the webinar for my explanation, and I think that the webinar really answers this question very well. If you watch the webinar, you will know exactly what I think about this situation. So I highly recommend you to watch the webinar. Since you'll have some time before market opens, go check this video out. Go to my channel, click on videos, click on this Sunday Prep Inflation Outlook, and watch that one. All right. Well, that's it for today. Carter, I hope I answered your question. Fibonacci retracement tool is right here, over here on this side. Same thing right here. It's right here, and yeah, that's what I'm using. All right, guys, have a good one. I'll see y'all soon. Take care. Wednesday is when I'll see y'all guys next, and we'll do the valuation of JD on that day. So yeah, take care, and I'll see y'all then. Bye bye.